Hi there ladies and gents, welcome once again to Module 3. This is going to be video number 40, number 2 of Module 3. Alright, so let's get crack-a-lacking. Alright, let's go over to our trading station. Alright, what I would like you to do, if you don't already have a chart open, is basically go ahead and click on this little plus button over here on the left hand top corner. Click it, choose the Euro. Alright, and then if you haven't done also already, there's a template that you can go ahead and use and place it into your templates folder as instructed through the videos as I've shown you, and go ahead and click on the green bars and you'll get this that come up. Go ahead and use the candles, which is the candles is right up the top here. Alright, and then come over to the navigator, okay, and get prepared to go ahead and put the accelerator, oscillator and the accumulation distribution indicator on there. But for the time being, leave it like this for the moment, and we're on the 1 hour time frame, okay, and what we want to do is use this little periods box here. You might actually have another row here, like, I mean, I can actually move this around if I want to, you know, but you might actually have one there which might already have your minutes on there, but you can go ahead and use a shortcut. Alright, and I'm going to go and use the 4 hour time frame for this example. Okay, and let's minimize the chart just a little bit so we can see more of the real estate, okay, and more of the chart's real estate right there. Okay, and let's show you first of all how we can find some support and resistance levels. Now, what is support and resistance? Well, let's just draw a line here. Okay, now this area, you know, this is the resistance and this is the support. Now, when the currency prices are moving up, and then when they stop at a certain point and start to come back down, and when it tries to go back up there again and stops, that's normally a confirmation right there of that particular resistance level. Alright, you can't establish a resistance level just off of one rejection. You really need to have a confirmation. Alright, and what this is basically saying is that the market, us the traders, okay, have decided that we are not happy with this particular currency pair, the euro versus the USD, to go up any higher. Alright, we want it to come back down. Alright, so you'll see some sporadic activity, as you can see here. Like, here is a high, and then later on we get another high, and it was confirmed. So we can now confirm this for future reference, where we can predict where the price might head towards. Okay, and you can see, like, you know, the market will come back down, and this is the same thing, same rule again. You know, when it comes back down here, it might stop, and it will go back up again, and then it might try and attempt to make try to attempt to break through that support, but it might not, and it might go back up again. Alright, and here is your confirmation that this is another support level. It's an agreement where people say, we don't want the trade to come down any lower, we're happy with that price, so let's swing back the other way. Alright, I hope that makes sense. Here we can see there's a bit of a low here, and there's just a little bit of a low there, and there's another one right there. So again, that can be used again for future reference, as we can use for like a TP target or a stop loss target or what have you. Alright, we have some midterm points as well, where we got let's just take a look. We got minor support and resistance levels. So here you can see there's one resistance there. I'm going to call this a major resistance, MJ, and then I'm going to call that one a major support. Alright, I'm going to get my screen drawer pen out, and I'm going to draw another line. Let's try green. because I think that comes out okay for colorblind people. And then we'll have, oh dear, I don't know if that's going to be good enough. Okay, cyan. Cyan. No, that's not going to come out. I'm really struggling to try and find a colour. I wonder if magenta. Ah, that might come out okay. I think this will come out as a dark colour as well. Alright, okay. And I'm going to call these levels minor support and resistance. So this is a minor. This is a minor resistance, and this one here is a minor support. Okay, and these are your big, the major resistance and the major support levels are the major areas in the market where a huge majority of people will agree, where the minor support and resistance levels are where, you know, you're getting that little battle going on where people say no, this is, you know, we want it to go up higher, and then the bears are coming in and saying no, we want it to go lower. So you get these little areas in the market, like this is a major support level right down the bottom here, and this one right here is a major resistance level, and in between you got these little minor areas where the market has agreed and stopped and gone back the other way. They won't always be 100% perfect. You just have to, you know, give it just a little bit of pinch of salt and use it as a guidance, but not as a rule. Alright, a rule to stick to, saying like, for instance, well, I'm going to go short and I'm going to target this area here because this is where all the people said that it's not going to go any lower than, so I'm going to go here. No. Alright, use it as a guidance to give you an idea of where the trade could possibly go once it starts to reverse. Alright, now let's just clear this off before we move on. If this video gets into a little bit longer than 10 minutes, then what I will do is I will pause and I'll create a part 2 of this video. Alright, actually I think I will pause right now for you because this is the support and resistance level that I've just shown you. So what I'm going to do in the next video is that I'm going to show you how to go ahead and find those supply and demand levels, which in a certain way it's kind of the same, but we can identify the supply and demand levels a little bit easier. Alright, part 2. Let's get our screen, draw a pen out in a minute, and let's just show you where we can find some baseline rallies. Here we go, we've got a bit here that's working. Alright, the way this really works is that we're really looking for an area in the market where it's happened more than once, and we've got to find that area first. Alright, and what this requires us to do is to keep going back and forth on the chart to try and find some areas. Alright, now I might have to zoom out just a little bit more. Okay, here's one. Let's get my screen draw pen out. Alright, a baseline rally. Well, what happens is you see this little section here. There's been a rally, and what I mean by a rally is that it's gone. Let's get another colour pen out. There's been a rally going up, down, up, down, up, down, and up, down. Okay, it's been a bit of a rally, and then it broke. Okay, and then it broke. Alright, and then shortly later we get another one, and here is a rally up, rally down, rally sideways, rally up, and then boom, breaks. Alright, and it comes down to there. Alright, let's see if we can find some more. I might have to clear my screen draw pen off just a little bit. Alright, now we can use these baseline rally areas that we used previously for future reference as well. Alright, so let's just put a little marker, bisect that, and then, okay, so we don't actually reach it there at the moment. So let's go back and let's see if we can find some other areas in the market. Okay. Alright, here is a bit of a baseline rally. We've gone up, and then we've basically gone sideways a bit, but there's been a bit of a range in there. So that block right there, alright, is a baseline rally, but this is a demand. This is demand, okay? People want the price to go up. Or as demand goes up, as the demand goes up, price increases, right? And when there's too much of it, people want to sell it, and then it just drops. Alright, so there's the demand, and you can see where it's broken. Alright, it's basically rallying, and then it breaks. Alright, so let's just take a look at that segment, and then to see if we can use that for future reference. Okay, so I'm just going to put a little marker there where we was, which is bisect the middle of it, and let's come back over and see what's happened. Right, I'm going to put this around about there. I'm going to get another line. I'm going to put it around about there. Okay, here we've got another baseline rally. We could have used this, as mentioned before, we can use it for future reference. Our baseline rally was around about there. Right, and once it breaks, and it breaks up to there. Now you might be saying, well, that doesn't look like it's moved that much. Alright, well, let's just take a look. From our breakout to the top of that point, it's 156 pips. Alright, this is naked trading at its best. Okay, but it does take a bit of practice to identify those supply and demand levels. What is a supply level? Well, here we can show you. Let's see if we can show you what's going on here. Here is a bit of a supply baseline rally. It's a little tiny one. Alright, and we can see that the market is coming in and it's going kind of nuts, and then it just breaks below. And then we got another one over here, and then the market just sort of like rallies, and then it breaks. And then we get another one around about there, but this one kind of breaks outside the box for a bit, and then it comes back down. Right, now if you make the mistake or make the assumption where it broke above and then you gone long, I would be extra cautious, because these here are essentially tops. Alright, tops in the market where the market would not go up any higher. Alright, and when these tops are formed, they are referred to as a double top or triple top. Alright, we've got top number 1, top number 2, and that section there is referred to as a double top. And where there's always a double top, the market is going to reverse and come back down. When you see a triple top, oh, get your wallet out and put a big bet on it. Alright, because there's your triple top. Alright, and a triple top is a lot more profitable. But timing is everything. Okay, when you see these triple tops, just clear some of this junk off. Here we can see that there's a top right there, and there's a top right there, and although that's not really a top, it kind of, this section right here, this kind of turned into a resistance level for the most part, where the market come back down and then it hit it, so that become a resistance level. Okay, and the market came back down again, and then it broke the resistance. So when the currency prices are above the resistance level, it now turns into a support level. So then the market came back down, broke the support, came back down, and then it hit the resistance again, because now the prices are below this line. So this is now a resistance level. It broke through, and it created an extra double top. Can you see that? Let's just draw some of this off. Alright, here was our first sections, and then later on it created another double top. Alright, number 2, and then boom, down it comes. Alright, what I would do if I'm just doing naked trading, I would have this support / resistance line in there, and then I would take a break off that line, especially when I see a double top. a double top is a really strong confirmation, especially when you've seen that this double top here has already been confirmed and broke, and now it's trying to break up and go up higher, and as your patience prevails, you'll see this the market move and create whatever it creates. Alright, so that's one way that we can go ahead and spot those. Alright, so this essentially right here, and this kind of area right here, is really a supply level. Alright, people are happy with the prices up here. They don't want it to go up any higher. They're looking for it to come down, so they're now looking for sellers. Alright, and then boom, straight away, two huge candles. This tells you that there's a lot of sentiment behind it in two candles, not like this one where you see there's lots of reds here. Now I do apologize that I have zoomed out a little bit, but trust me, there is 1, 2, 3, 4, 5, 6, 7, 8 red candles there, not all in a row, but there are about 5 in a row here, and then there's a green candle, and then there's 3 red candles there. When you see that the market staggers like this and it takes its time to come down a big distance like this, and then you see another one that has a huge candle, boom, one there, and then boom, down there. When you see huge candles like that, that's huge sentiment in the market to come back down. Alright, that's huge. When you see this one here, like I've just shown you, just move some of that nonsense out of the way, you see where all these red areas are? Alright, then, well, where I've got my cursor is, if you're colorblind I do apologize, but where I've got my cursor here, you will see that this color is different from this one. It might be a different shade for you. Okay, so where all these have taken its time, it's more or less taken, we're on a 4-hour time frame here, so 1, 2, 3, 4, 5, that's 20 hours, plus the green bar, 24 hours, and there's 3 more red bars, so that's another 12 hours. So 36 hours it took to get from this top level to get down to this level. Took 36 hours. Alright, and look what happened. The market went the other way. Then take a look at this one here down to here. It's a huge drop, right? And then the second one, that was in 4 hours. Alright, that's 4 hours. That is a sentiment to let you know that it is getting ready to drop even more. Alright, now I can prove this over and over again until I'm blue in the face that this pattern emerges all the time. Alright, like for instance, 1 candle, 2 candle, 3 candle, 12 hours, and then it went sideways. Right, here's a candle number 1, candle number 2, candle number 3. It went sideways, it didn't drop immediately, or it didn't even really come down that much. Alright, but then you get a huge candle, 1, 2, and then boom, down it comes. Alright, so this is all a part of market sentiment and trying to work out when the market is going to drop. Alright, and we're going to be using that kind of analysis in conjunction with using the indicators that are actually available within the MT4 trading station. So I hope this video has helped. Okay, and I will see you very soon in the next video. Bye for now.